The housing crash is here. What it means for you. I have all the details and what you need to know right here in the video, so let's get right into it. Alright, as of recently, we've been getting some very alarming information and reports coming out specifically focused on the housing market. That's what I want to talk about right here in the video, because whether you're involved in the housing market or not, it's all going to impact us in some way, shape, or form in the event that this housing market continues to contract. For example, let's quickly think back to 2008 and 2009. What happened then? The housing market contracted in a really big way. The whole thing went down and it brought down the economy and brought us all into a very deep, dark recession. As a result of that, I want you to be aware of what is currently going on right now with the housing market, as well as all of the other markets and how this may impact us going forward. So let's get into it and discuss all the details. So just this morning, we got another new report coming out talking about the housing market, and honestly, this one is pretty alarming. So this report that was just released this morning is in reference to existing home sales. So it showed that last month alone, existing home sales in the United States contracted by 5.9%, nearly 6% just last month alone. On a year-over-year basis, existing home sales contracted by 20.2%. Again, not a good metric right now, right? So it is showing that the housing market is contracting very, very aggressively right now. Now, these are the worst readings that we've seen since May of 2020. However, here's what's interesting about May 2020. Let's all remember back. What were we doing in May 2020? Well, I think all of us were probably hanging around home in our pajamas all day. Why? Because we were pretty much still in the lockdown phase of COVID, as COVID lockdowns were just a couple months prior, and things were still very restrictive at the time. So these are the worst readings that we've seen in, almost 2.5 years, right? That's a long time, right? But again, that's not really a fair analysis simply because of what was currently going on at the time. However, if we look back prior to the May readings, the last reading that we saw that was this bad when it comes to existing home sales was way back in August of 2013 into January of 2014. So a long, long time ago yet again, right? Well, all of this is being contributed to rapidly rising mortgage rates. In fact, as of right now, the rate on a 30-year fixed rate mortgage is sitting at about 5.25%. Now, to put that into perspective, back at the beginning of this year, guess where a rate on a 30-year fixed rate mortgage was? You won't believe this. It was sub 3%. 2.86% is where a rate on a 30-year fixed rate mortgage was sitting just at the beginning of this year. Not that long ago, right? And here we are, almost double that at 5.25% thereabouts as of right now. So again, a lot of buyers that are out there right now are simply thinking, I don't want to pay 5.25%. That's nuts. Why would I pay that? Well, exactly. As a result of that, we're starting to see a lot of buyers walking away from this market right now. And some sellers are also fearing back right now because they're thinking, why would I sell my house right now when I'm locked in at 3.5%, 3%, sub 3%, even 4% would be a very good rate these days. So some sellers are coming out to this market right now thinking, why would I sell my house now when I have a nice low rate locked in and then have to go out and buy a house right now as prices are still pretty high and lock in a high rate of 5.25% or something like that. So both sides of the equation are starting to play out right now, where buyers are starting to walk away because they don't want to lock in high mortgage rates, and sellers are kind of starting to fall back as well during this market because the same reasons, right? They don't want to sell and then have to lock in a higher rate as well. Here's what's also interesting about it. As of right now, a new report that was just released is also showing that new mortgages, get this, applications for new mortgages are at the lowest rate right now that we've seen since 2000, the year 2000. 22 years ago was the last time that we saw mortgage applications at the current rate that they are right now. So seriously, this brings us all the way back to Y2K. Remember good old Y2K when everybody was stacking up canned food and firewood and all kinds of weird stuff back then? Do you remember that stuff? I remember it. I was about, how old was I? 15 or 16, something like that. But the fact of the matter is, I remember people all over the place getting all kinds of canned food and stuff because computers weren't going to be able to add a zero or something. Remember? I don't remember what the exact reason was, but it was something really weird about that. I just remember Y2K. Anyway, it all comes back to that. So mortgage applications right now are at 22-year lows. That's not a good sign. If people are walking away from getting mortgages right now, I can tell you this much. There are not that many cash buyers out there. There are some cash buyers, don't get me wrong. There are still institutions buying. And again, are institutions getting mortgages? No, they're using cash, right? So There's not that many cash buyers out there. If we're seeing mortgage demand dry up right now, that just means it's going to actually translate into demand for housing as well. Remember, the housing market is just like any other market out there. It's just like the stock market. It's just like anything else out there. I mean, we could be talking about canned food. We could be talking about milk. We could be talking about eggs. We could be talking about cereal. It does not matter. All markets operate the same. It's all about supply and demand. Well, if we have diminished demand in the housing market right now because applications are drying up on mortgages, buyers are simply walking away, what happens then? Well, we have an influx of supply. We have supply on the market, low demand. What happens? Price must go down. In other words, crash and burn, right? So that's what we got to continue watching as well. The housing market is no different than any other market out there. It's all driven by supply and demand, which indicates price. That's what dictates price, is supply and demand. Anyway, now let's quickly talk about another report that came out as well that we also want to pay attention to very closely. Now, this report is actually showing how many purchase agreements were canceled last month as a result of housing agreements, right? So you go out into the housing market, you write up a purchase agreement, and then all of a sudden it falls through for some reason. Well, last month alone, 63,000 purchase agreements were canceled last month alone. That actually represented about 16% of the total number of purchase agreements that were actually contracted into last month alone. So you can kind of see here, 16% were canceled. That's a high figure yet again. Now, generally on average, according to what I was reading and about what I was actually researching on this, they say on average about 12% of the purchase agreements are usually canceled per month. Well, we're sitting at 16%. Again, an elevated number of people canceling purchase agreements last month. Why? Well, we don't really know why. We don't have a really good reason why, but there's a lot of different reasons why. Maybe buyers got cold feet because they said, hey, I just locked in my mortgage at 5.5% or 5 3/8% or 5.25%. I'm not very comfortable with that. Or maybe buyers are starting to have a little bit more leverage now where it's not a seller's game like it was over the last 2 years. Yes, sellers can still demand a pretty high price for their properties right now, but at the end of the day, buyers also still have a lot of leverage at this point because it's no longer as weighted toward a seller's game as it was over the last couple of years here. So as a result of that, buyers might be just simply walking away thinking, wait, when I wanted this house, it was priced at X, and now I feel like I can get something better for less. So why not let's just cancel this purchase agreement and walk away and go find something a little better. So that's what we're starting to see right now. So just like every other market out there, it takes a long time to turn these things around. When the markets do finally turn though and find a direction, it usually moves in that direction pretty fast. Just like the stock market and everything else out there, we have to watch these markets very closely because any of these markets, as they collapse, as they continue to contract, like the housing market, could take down the entire economy just like it did back in 2008 and 2009 with the subprime mortgage process and things that went down back then. So you got to watch all this stuff closely. Anyway, these are some of the reports that are coming out right now. I wanted to share these with you because we're starting to see the tide turn on this real estate market and the housing market as a whole. Now, quick side note, I watch the real estate market in my local area very, very closely. Why? Because I like to keep an eye on what's actually going on. I want to see what's going on in all markets. I watch the housing market very closely. I watch real estate all across the country pretty closely. I watch the stock market every single day. I watch all of these markets very closely because I want to know what's going on with any of these markets. Any crack in any market could take down the entire system, right? That's what I'm saying. It's all highly, highly correlated like a big machine. Any gear that might stop working, a belt that might break, a gear that strips out, anything like that is likely going to take down the whole thing, right? So that's why I'm watching it closely. But here's what's interesting. Even in my local market, I'm still seeing pretty strong prices on a lot of different homes. However, we're starting to see some price cuts. It's been a very long time since I've seen a price cut on anything out there in the housing market. Years, right? But as of recently, the last couple of weeks here, I've been starting to see some price cuts coming into the market, which is, again, starting to tell me that, wait, this is probably not a very good sign because when we start to see price cuts rather than price being jacked up every time you turn around, then again, that's not exactly a good sign, right? Typically, you see all of these people coming in, bidding prices up. We're not seeing that. All of a sudden, houses were selling literally the day that they were hitting the market. Now we're not seeing that anymore. We're starting to see houses sit for a while and even prices coming down, being cut a little bit. that's a good sign. I mean, if you're looking for prices to come down on the housing market and because you want to buy something, that would actually be a good sign, right? It would show that the market has probably topped out a couple months ago and it's starting to make its way down the other side of the mountain. Anyway, as I do get more details on any of these reports, any of these markets, the housing market, stock market, or anything else going on right now, of course, I'll continue to watch everything closely and bring you those updates right here in these videos. But I wanted to bring this one to you because we're starting to see some major cracks in the real estate market. We're seeing some major cracks in housing right now, and I want you to be aware of this stuff because at any given time here right now, if any of this were to kind of start to fall onto itself, start to collapse a little bit, start to roll over, it's all going to be something that we need to watch closely because the housing market is huge and it all impacts us in some way, shape, or form, right? So anyway, I'm here for you in any way that I possibly can be. Please make sure to subscribe down below if you haven't done so yet. Also, make sure to share this video with your friends, family, social media, and go back and check out some of the other thousands and thousands of videos here on the channel. Again, thanks so much for joining me. Subscribe down below, and until next time, have a good one, enjoy your day, and I'll catch you again later in the next video.